Before we start, ask yourself one question. How much of your money advice comes from social media? If you've ever followed a money hack from your feed, this could be costing you more than you realize. Viral advice isn't tested, it's edited. One hot stock or crypto can wipe out your savings. Rent is wasting money. That belief alone can push you into a house you can't afford. Free travel points can quietly turn into 24% interest. And I'll invest later is how later becomes never. Today, we're breaking down 5 of the most expensive money myths on social media with real data and real numbers.
Myth 1. If it's viral on TikTok, it must be smart money advice. Quit your job. Start a side hustle you saw on TikTok. Drop ship some products. Post a few videos. And you'll be making thousands a week in no time. You've seen that exact vibe 1,000 times under hashtags like side hustle, money talk, and passive income. Creators show you drop shipping, day trading, AI money hacks, and promise insane results with almost no effort. But here's what they don't show: the people who copy them and quietly lose money. A 2025 survey commissioned by TSB Bank asked over 1,800 social media users about financial advice. 31% said they acted on money advice they saw online. Of those people, 55% lost money, more than half. And that's not even the worst part. TSB says social media investment fraud cases average £3,706 lost per person. For many people, that's rent money, that's a semester bill, that's a car repair you can't ignore. TikTok and other platforms were a big source of those cases. Most of it came from unregulated tips and high-risk schemes dressed up as normal advice. Now think about how this actually works. A creator shows you, I made $500 in a day doing this side hustle. You don't see their costs, refunds, paid ads, or how many hours they worked. You don't see the dozens of failed products. You don't see that their real income is from views, sponsorships, and selling you a course. You only see the polished part that makes you think, why not me? And that's when the shift happens, because now it's your turn to try. You buy inventory for reselling. You pay for a website, tools, maybe ads. You spend nights trying to make this easy side hustle work. The creator earns more from your clicks than you earn from the hustle. When it flops, it feels like a personal failure, but the game was rigged from the start. The content was designed for engagement, not for your results. And here's the painful truth. Viral money advice is not built for your life. You don't know their rent, their parents' help, their debt, or their privilege. You only know the part that fits in a 30-second clip. And that's why the stats look like this. Millions of views, success stories in the comments, and in the background, a silent majority who tried to copy it and paid for it with real savings, real credit card debt, and real stress. So the next time a video promises easy money, ask one question. If this was so effortless and safe, why are they selling it to millions of strangers instead of just quietly getting rich?
Myth 2. One hot stock or crypto will make me rich fast. Buy this coin before it skyrockets. Put $500 in now, it'll be $5,000 by next month. If you miss this, you'll regret it forever. That line has emptied more accounts than people will ever admit. Because when something is hot, your brain stops doing math. You don't ask, what's the risk? You ask, what if I miss it? And social media knows that. It sells you urgency, and it's working. In the U.S., the FINRA Investor Education Foundation surveyed 2,861 investors. It found that 61% of investors under 35 use social media influencers when making investment decisions, and nearly 1 in 3 bought meme stocks or other viral investments. Now move that behavior into crypto. That's where blind investing becomes blind trust. The FBI's IC3 report states that Americans lost $9.3 billion to crypto-related fraud in 2024 alone. And the biggest category wasn't bad timing. It was investment scams, $5.8 billion gone. Now here's what that looks like in real life. You're 23. You're scrolling after work. Someone in a hoodie says a coin is about to 10x, or a stock is guaranteed to pump. You open Robinhood, Coinbase, you put in $300. Then another $700, then $1,200, because everyone in the comments says, we're early. Price moves up a little, you feel like a genius. Then it drops 30% overnight. You panic sell. A week later it bounces, but you're already out, emotionally wrecked. And now you're chasing the next sure thing to make it back. That cycle is how people stay broke while thinking they're investing. If a 10x was real and safe, it wouldn't need a viral video. It would need silence. And if the advice is to go all in, that's your signal to step back.
Myth 3. Credit card rewards mean free travel, so put everything on cards. Put everything on your card. Points are free. Travel is basically free. That's the flex all over TikTok. Airport lounge clips, free flights, credit card points treated like a cheat code. Here's what they don't say out loud. Rewards are only free if you pay your balance in full, every single month. The moment you carry a balance, the math changes, and it changes fast. LendingTree's February 2026 report found the average interest rate on new credit card offers was 23.77%. For people who actually carry balances, the average interest rate in late 2025 was 22.30%. That's not a small fee. That's more than 20% interest. Now compare that to the value of the free travel. Bankrate's 2025 analysis shows most airline and hotel points are worth roughly 0.4 to 1.3 cents per point. Many credit card points default to about 1 cent per point, unless you redeem them strategically. In simple words, you're earning pennies, while interest charges you dollars. Now here's how it plays out. You put $3,000 of life expenses on a travel card because you want points. You tell yourself you'll pay it off, but you don't, because rent, car, and everything else already ate your paycheck. So your free travel turns into a balance at roughly 22 to 24% average interest rate. You earn, say, 2% back in points. That sounds good, but your interest is over 22%. That's like picking up coins in front of a moving truck. So if you're not paying your card in full, you're not a points person. You're donating money to the bank for the privilege of posting free flight content. Your points aren't flying you to Cancun. Your interest is.
If you want money advice that's tested, not trending, subscribe. Every week, we break down what actually works with data, not vibes. Myth 4. Rent is throwing money away. Buying ASAP is always smarter. If you're renting, you're paying someone else's mortgage. If you don't buy now, you'll never catch up. Rent is just burning money. That line hits hard because it shames you. It makes you feel behind. And it pushes a massive decision into a rushed emotional one. Renting isn't automatically wasting money. Overpaying for a house you can't comfortably afford is how people destroy their cash flow for years. Let's talk numbers, not vibes. Bankrate's 2025 Rent versus Buy study found something surprising. In 2025, renting was cheaper than buying in all 50 of the largest U.S. metros. All 50. Nationally, Bankrate estimates the average mortgage payment at $2,768 per month. That's for a median-priced home, and it already includes property taxes and homeowners insurance, while average monthly rent was around $2,000, including renter's insurance and inflation-adjusted. That means the mortgage side was about 38% more per month. So when someone says rent is throwing money away, ask them, compared to what? Paying 38% more every month. In November 2025, Zillow and Thumbtack analyzed the hidden costs of homeownership. Nationwide, those costs average about $15,979 per year. That includes roughly $10,946 in maintenance, $2,003 in homeowners insurance, and $3,030 in property taxes. And Zillow notes these expenses are rising faster than incomes, which is exactly why Just Buy can quietly wreck a budget. Now let's see what that looks like in real life. You're 29. You rent a place for $2,000. Your feed calls you stupid for not buying, so you buy, and your monthly payment becomes $2,768. Then the roof leaks, the AC dies, insurance goes up, taxes go up. Now you're building equity, but you're also building stress, debt, and zero freedom. So don't buy because TikTok shamed you. Buy when the math works and your life is stable enough to stay put.
Myth 5. I'll start investing later when I make more. I'm not broke. I'm just not ready yet. That's the lie. Not because you're lazy, because modern life makes it feel responsible to wait. Rent is high, groceries are high, and your feed keeps showing people who look richer than you. So you tell yourself, once I get a better job, once my income grows, then I'll start investing. And that one delay is quietly expensive. Here's the cleanest way to see it. Money doesn't grow the most when you invest the most. Money grows the most when you invest the earliest. Fidelity's retirement data shows the average Gen Z 401k balance is $13,500, while millennials average $67,300. That gap isn't because Gen Z is bad with money. It's because time is the cheat code, and most people don't start early enough to let time do its job. Now hear how it goes. You're 24. You say, I'll start at 30. That sounds like a small delay. It's only 6 years. But 6 years is 72 paychecks. Let's say you invested just $500 a month at an average 8% return. In 6 years, that could grow to roughly $46,000. About $36,000 would be your contributions. Nearly $10,000 would be growth. And that's before your 30th birthday. When you say later, you're not just delaying investing. You're deleting years of growth you can never buy back. So the fix is not invest a lot. The fix is invest now, even if it's small, because small plus time beats big plus late.
So here's the line you need to remember. The internet sells feelings, not financial outcomes. If the advice is fast, secret, or guaranteed, run. If the plan depends on monthly payments, do the full cost. If you're chasing points while carrying a balance, you're paying for that free trip with interest. If you're buying a house to prove you're adulting, check the real monthly payment and the hidden costs. And if you're waiting to invest until life is perfect, life won't be. Start small, start now, and make boring moves that compound. Pick the myth you believe the hardest, comment it, and send this to the friend who keeps saying, "Bro, trust me, it's going to the moon." I've linked the research and sources in the description if you want to verify everything yourself. If you found this useful, subscribe for more evidence-based money ideas. Thanks for watching, and I'll see you in the next one.